It's good to be back in Leicester, where English is now the third official language. I've got a host of racist gags, but apparently we've got to get on with the job at hand. So, over the last few years, a great deal of industry opinion has been focused around robo-advice and what robo-advice really is, and its threats to traditional intermediaries. Digitally enabled advice and application is probably a better way of describing the significant improvements that technology will bring to the customer experience. Although this is a relevant backdrop to today's panel session, today's debate will focus on the use of consumer data and how data profiling and machine learning will enable us to understand so much more about our existing and potential new customers, and even predict their behavior and the products and services that are most relevant to them, and critically, when. Arguably, how much data consumers give us access to and what technology will enable us to do with that data is far more game-changing than digitally enabling the advice and application process. So what is possible? How our consumers are likely to respond, and how this could significantly impact customer acquisition and retention models is what I will be quizzing today's panel about. Now, I would like to say this is the most radically different panel I've chaired at a mortgage conference in 30 years in the industry. This is a seriously impressive panel, and it's made up of Ian Major, Operations Director at RunPath Group, who basically build really clever online customer engagement solutions, such as aggregator sites, amongst many other things. Derek Garriak, who heads up strategic design and innovation at Experian, delivering insight and design solutions for customers and industries through the provision of data and analytical tools. Matt Battersby is the Chief Behavioral Scientist at the Reinsurance Group of America. Matt is responsible for the effective deployment of behavioral design throughout RGA and to its clients. He helped a wide range of organizations implement behavior change strategies to help meet diverse business goals. And making up the numbers is Miguel Sard, who heads up Santander's UK mortgage division, and is the current UK chair, the mortgage chair of UK Finance, which should still really be called Finance UK. He's also an expert on the British citizenship exam, if you're interested. So. Right then, Matt. Behavioral psychology has helped businesses shape communication and sales strategies by understanding how and what consumers respond to best. Can you share with the audience some basic behavioral characteristics that can help any business understand how their customers make decisions and how that can help them position their products and services?
Yes, you're right. It's something that behavioral scientists have looked at for a long time, and the reason is that people just often do act in ways we find surprising and just seem so irrational. That's what keeps me in business, is trying to understand that. So consumers don't always switch to a cheaper or better product. Investors too often follow the herd. I think we could all probably admit to ourselves we don't, eat as healthy as we know we always should, or exercise as much as we know we should. And behavioral science has always been about understanding that. What's changing now, I think, is the combination of behavioral science and data science really helping us to understand a bit more about that. I'd say a couple of key points just to note for what we're understanding about human behavior. First one is that people just make many more decisions than we think they do, and that you think you do. A great example of that, I use this example because we all understand it, is think about the decisions you make every day about food. If you ask people how many decisions do you make, people on average say about 15, breakfast, lunch, dinner, how much, what, when. Actually, on average, people make over 200 decisions a day about food. So more than 15 times as many decisions as they think they do. And the reason for that, the reason you don't know that, is you're just not consciously aware of all the decisions that you make. So when you're going to work in the morning, driving or walking into work, you'll go past places where you could get a coffee, you get something to eat. You don't consciously stop at each one and think, am I going to eat, am I going to drink? But your brain is processing this information and it's making decisions for you. And this is what we're understanding, that applies to so many other areas. You're making so many decisions that you're just not consciously aware of, and so you're not able to say why you're making these decisions. And that's where data helps us. I think it's always important to understand, okay, so what kind of decision is your customer making? If it is a kind of more unconscious type decision, so is it rather than being a customer in a restaurant reading the menu, are they a customer walking down a high street, your product, something in the background? That's when you have to understand what shortcuts they're using. That's what behavioral science comes in. So when you're making these quick decisions, you're using shortcuts to make decisions. You're looking for patterns. You're looking for quick associations to make your decisions. So in insurance, where I come from, one of the shortcuts that we often talk about drives behavior is something called the availability heuristic. So people judge how likely something is, how risky something is, often just based on how easy it is to imagine it could happen and how easy it is to recall it happening elsewhere. This is such a big impact on people's decisions about insurance. This is why you see insurance rates go up after a natural disaster, because the risk doesn't change, but people suddenly realise that this could happen. And so you need to understand those kind of biases that play in people's behaviour. And I would say one final thing about the interaction with data here is what we're finding is data's allowing us to understand behaviour so much more, but also it's shown us that online behaviour is often quite different to how people behave online. Keeping with the food theme, one of the interesting things I've seen is that restaurant and takeaway chains are realising that people act very differently when they buy online than when they do buy face-to-face. So if you buy a pizza online, you're much more likely to get unhealthy toppings, many more toppings, and really unusual mixtures of toppings than you would face-to-face. And the reason being, perhaps you're just making a quicker decision when you're acting online, but also you're less embarrassed when you order food online. If you're ordering pepperoni and pineapple, perhaps you're less embarrassed about that when you do it online. So behavioural science and data science is really actually showing us how different people act in different circumstances.
Oh, I like liver and kidney pizza. I'll stick it with you, Matt. Technology analysing consumer data is evolving at a rapid rate. Can you share with the audience how these developments are helping you innovate in terms of more customer-centric products and pricing, and what will we start to see as a result?
Yeah, so obviously with insurance, often what we're looking at is prediction. So can we use data to make better predictions? So if you're applying for life and health cover, we want to know what's your mortality and morbidity risk. And often that is, we ask you loads of questions, or we ask you to go for tests so we can understand that better. But obviously that puts a barrier in the way for consumers, it makes the process difficult and long. So looking at how other data from other sources can help with that process and make predictions. And one of the areas you've seen a lot in the industry at the moment is using credit scores to help predict people's mortality rates, which you wouldn't think is something that actually tells you, but it does. Someone's credit score can tell you a lot about their mortality risk. So using data from other sources to help you solve a problem is a key part of what's happening now. I think what's interesting, that's about prediction. So can I use data from elsewhere to understand why you're behaving this way here? I think the next step with that is influence. So if data can help me predict why you're behaving in one way, can we help provide it to the consumers to help them understand their behavior and change it and use that to actually influence how they behave?
So would data from social media play a part in this?
Yeah, I mean, there's research that shows that data from social media, you can get a good insight into someone's psychological characteristics through what they do online. So Facebook likes and tweets and things like that. How that data used, I think, is still to be debated. But absolutely, I think when people go through their daily lives, they are given a lot of evidence into their psychology.
So Derek, how do you see open banking, which is a buzz phrase of the world at the moment, and digital transformation impacting on the provision of mortgage advice and the customer journey?
So I think where we are is that we have a tendency probably to overestimate the impact that it will have in the short term and then underestimate the impact that it will have in the longer term. I think in terms of where we are today, I see it having a big impact in terms of how we target customers in the first instance. I think if you were to take some sort of basic levels of data, we hold maybe 500 data points on each household in the UK that enables our kind of marketing capabilities to target customers. So there's a wealth of data out there that you can use to start to look at how you engage with customers. But I think with open banking, when you then start to overlay that with other data sources, you get a very rich view of that consumer to allow you to be in a place where we can drive things like pre-qualification for lending. We can do pre-population of fact finds and pre-population of application forms, but also then inform the downstream affordability checks that effectively will take place post sort of the application progressing. That I think in terms of over the next 12 to 18 months, we will see quite a change in terms of how data starts to infiltrate into the mortgage industry to really take out some of the pain points for the consumer. I think longer term, what you're looking at is that data will start to really change the way that consumers think and approach how they buy all products. The likelihood is that as we get further adoption of the use of open data, what is likely to happen is that we're able to create a single view of a customer that customer owns, and they will consent to who and what companies they share that data with. But that is likely to inform almost the way that people purchase products, and will really almost change the dynamic as to how we know it today, to being a kind of world in the future where data will almost drive and inform some of the bigger decisions that we make. But when we purchase, what we'll do is we'll share our data with that organization or that company, rather than being in a place where we follow traditional processes where we have to provide a lot of that data manually. At the moment, it'll be more like a kind of data passport that you would share.
So you can see a point where you just email a random customer and say, here, I've filled your mortgage form in already, it's all done for you, almost pre-approved, don't know what your name is, just fill that bit in.
I think potentially you end up in a place where from an artificial intelligence that people will hold all their data, and the intelligence layer that sits over that will be in a place where it will go out into the open market and establish what those customers' needs, wants and problems are and find the appropriate solutions for them. And then with the customer's consent, provide the data to that organisation to complete the transaction.
Thank you very much. So Ian, open banking is a significant enabler for this new data-driven economy. How do you see this changing our day-to-day lives, but also how will it impact on how we do business?
So good question. Just for a bit of context, I also am lucky enough to sit on the steering committee for the UK's implementation entity for open banking. And what I've seen, to the first point, over the last 2 years is a lot of very gifted people coming together to work and collaborate with both the banks that have been mandated to share this data and the third-party community, which I represent at that table, to collaborate on some new standards and specifications that really will enable this new ecosystem of data being shared. In terms of what that means from a consumer's standpoint, fundamentally, banking data has always been hard to access, as we know. Any firm within this room with the right permissions now moving forward will theoretically, on behalf of their customers, their clients, and their customers' consent, be able to obtain that information for them to do better things for them. And what we see in all of this transactional data is rich, granular insight into how people behave. And it's in its formative stages, so it's current accounts only at the moment, but other payment accounts coming on stream, and open banking implementation entity have been charged with implementing credit cards and all of the other types of products you would expect. But if you can imagine, back to what Derek was speaking about, the ability to amass this information on behalf of your clients, to reason over how people are behaving with their financial products, the theory goes that you'll be able to introduce better products to them in the future. For us as businesses, that means we should embrace change, as we've been hearing about all morning. But fundamentally moving forward, avoid detriment by using these tools and actually lead to better customer outcomes with new financial products. And that speaks very much to mortgages, but also a broader set of things that you could introduce if you had line of sight on that data as well.
And do you have a time frame when this will happen?
Yeah, so from an adoption standpoint, I have a personal opinion on time frame. So this kit's out there, but there's very few organisations that are regulated to be doing it at this point in time. I think it's a bit of a J-curve, and I know that a great deal of propositions are being built in the background that will be coming on stream to support our market, the intermediary market specifically, but other channels as well. And as a business, Runpath work with what we call introducers, but the aggregator space, intermediaries as well, and also institutions. So we're seeing those propositions being worked up. Bringing together these things mean that I think that J-curve kicks in maybe at the end of this year, beginning of next year, where bigger brands, bigger institutions, networks introduce those tools and services. And people, because there's an value exchange, will just consent to get the gratification of whatever the product is, and therefore start sharing data with all of the correct consents in place.
Miguel, I like your shoes. From a lender's perspective, what do you think innovation in data profiling will mean for our business? Is it going to make our world easier or more competitive? And will the opportunity is going to be captured by traditional intermediaries with large IT budgets, or is all this going to be done by skilled data scientists and the intermediaries are out the game?
That's not a question. There is 7 questions in a question. So first of all, I think, in all honesty, apart from looking at, I try not to see your shirt. I need to apologize because I did something wrong last year in this conference because I don't know what I'm doing with these bright guys sitting here talking about data. I'm not an expert in data, and I will never be. They are extremely smart. I am working in a bank, so it's a big difference between one and the others. So I think I will try to put in real terms, probably something that for me is easier, is to understand what we are doing and what we are not doing. And I think we have been listening quite a lot of things about technology, and Derek had said that is we overestimate the impact or not, because I'm sure that you are sitting, all you sitting there, you know, I'm not answering your question, so it's not the trick. But it's, all of you are sitting there saying, I've been coming to this type of events for 5 years. Everyone is talking about technology. Everything is going to move to a different place. But we get 80% of the market. And we are quite traditional, let's say like that. I know that MAB is investing and we are moving. And I think it's only a message, is what we are seeing as an organization, is that although steps look, when you see that what is happening, look every day, look that we are not moving so much. When you look back 5 years, you realize how big has been the change. And we believe that in the future, that's going to be the same with what we are talking today about data. For us, I try to translate what it means for us as Santander, or I suppose that the big organization, we are trying to get the better use as possible of data. Basically, is we are able to identify needs. That is what we do. At the end, all of us, we are here to try to get the best outcome from our customers. So it's easier to identify needs. And when we are able to identify needs, it's easier to get better solutions. And sometimes we can have conversations with customers when really the customer doesn't think about that. It's something that probably is 2, 3, or 6 months in the pipeline. We are able to have that. We are able to have better interactions. We are able to identify feedback. We can put the feedback in our relationship. The customer journey is easier and frictionless. We can get data from different places and we make things easier. That is perfect. So in that sense, we are in a better place. But I believe that on the other side, we need to be careful because we need to invest. We need to learn. We need to work with these bright guys in order to identify how we have to do that. Because if we believe that many times we have heard that in our industry that, well, mortgages is different. Mortgages is so difficult that it's never going to happen. Someone in 2, 3, 4 years is going to be doing that. And the customer, that is the only relevant thing, the customer is going to be talking to them because they are happier. And we are going to lose our customer. So what I would say is, from our side, is we are investing, and especially what we are doing is learning a lot. And from there, we are seeing that there's better relationships and outcomes with our customers.
Thank you. Derek, given your position in the market, Experian must have consumer insight as to how accepting customers are going to be in sharing their data to provide quick and easily personalized digital experience, and who they'll share that data with, because, you know, they don't trust banks.
Yeah. I would counter that in terms of our research would say otherwise. That I think in terms of the immediate term, the banks probably have a greater level of trust. Don't believe what you read in the media. When you get into sessions with customers from a design perspective, they're very trusting of their bank. I think the challenge that we see is it's about the value transfer that takes place between the consumer and the organization, and then their willingness to consent to sharing that data. So we've done a lot of research over the last year or two in terms of how does this play. And I think if you come into a marketplace and ask the customers off the bat who would be prepared to do this, you actually end up in a place where maybe 10 or 11% say that they would share their data, and the rest of the audience say, we wouldn't do that. When you then start to show them value propositions that could effectively be driven by them sharing their data, and they actually have the opportunity to go through them, what we see is that we can get to 70 and 80% acceptance of data sharing when you show that. That to bring that to life, we've built over 50 different examples that we've tested over the last year with customers of different propositions. And one example that tested through the roof was in the credit card space, but effectively what we did is the customer gave us permission to access both their bank account and their credit card accounts. We analysed that data in seconds and came back and said, based on how you're repaying that debt, it's going to take 31 years for you to repay your credit cards. We can show you an alternative way where you can repay that debt in 4 years and save 27 years of your life paying that debt using effectively the same budget by changing products. And then we take them through a scenario where they go to the open market, they take a balance transfer, a refinance loan, and you're in a position where we can demonstrate that we save the customer £15,000 or £16,000 in payments, 27 years of their life in terms of making it, but the data effectively drives a compelling reason why they should do it. And when we've taken customers through that, they all turn around and say, if we'd known that at the start, we would have shared the data. So you are in that space where the challenge for organizations is about getting that value proposition right, that it meets the customer's requirements, and they will share the data.
Thank you very much. Right, I'm not allowed to swear, but I think this is a swear word. So GDPR, Miguel. What impact will GDPR have on us, and is it a step back in our ability to use this type of technology in profiling customers? On the one hand, we're saying, yeah, give us all this, and we can do this, and then on the other hand, saying, no, you can't do that.
GDPR, well, first question is, do you know when GDPR is implemented? It's tomorrow. So, again, bank, we've been 12 to 18 months in a huge project to be sure that tomorrow we are compliant. I hope that all of you have done the same. If not, you have a problem, seriously. So I think for me, GDPR is, again, everything starts and ends in the same place, that is the customer. And for me, that I'm not an expert in GDPR, the message is that we are putting the customer in the center, and customer owns the data. And they decide how we are going to play or to manage that data, the consent, and what we have to do. Look, all of you have heard, you have read, like one of the biggest companies in the world that have billions of friends, that my son and daughter, they are all day playing with that. The CEO has gone to the US Congress, has gone to the European Union, has not come to the Parliament because with Brexit they don't know where they have to go, but they have been apologizing because they have not managed properly the data. And the company that has done something wrong is closed. So I believe GDPR, we can say that is good or bad. What's the point? Is there. So I think someone explained to me something easy, because I need to remind that, very simple. Everything comes to a couple of words. That is how we collect the data and the consent that we get from customers, how we store the data and the security that we need to have there, how we manage that data, how we update data from a customer. And one thing that I never thought about that is how we destroy the data, how we eliminate the data. So is it a step back? I don't think so. I think it's going to oblige all of us to raise our game. I think it's going to oblige us to convince customers that providing data and giving us consent to use that data is going to give the customer something. That probably is a feeling that all of us, that we have received plenty of communication from different people that sometimes you ask, why they get my data, why I can get all this from these guys, and it's not adding any value, that is going to disappear. But that obliges us to invest. Again, I always talk about investment. I'm a little bit obsessed with that. We need to invest, we need to learn, and we need to be able to offer that thing, something different to a customer to say yes. Finally, if we believe that we can have workarounds around GDPR, big mistake. The fines that will come with that, and I can tell you that the regulator is going to push for that because they want to give example about this, are massive. Some companies will close if they are fined because they have not managed properly data. So in summary, I think is good. Summary, I think is tough. And in summary, obliges all of us, financial services and non-financial services, to really put the customer in the center and to have a proper conversation with them on how we have to be managing the data, because at the end of the day, the data only belongs to the customer.
There are, so what happens when you have data sort of oxymorons almost, so that the customer says, I want you to destroy that data, and you go, no, I've got to keep this data for 2 years because the bank's asked me to keep this data for 2 years.
Yeah, and that is something that we know in mortgages. So many times we are obliged as a lender to show the data that we have captured from a customer in order to make the decisions in terms of affordability, in terms of why we have lent to a customer or not. And that is one of these challenges that as a bank, and I suppose many of you, we are having. So GDPR says something, other regulation, MMR, for instance, says something different. And we are going through that. So I don't believe that GDPR is going to be tomorrow everything is a tick. I think we are going to be in the 90% of things we'll have a tick, but then there's going to be some specific areas that we will need to address as we walk.
Excellent. Ian, right, so to build and evolve aggregator platforms, that's what you do, you must use the learning from enormous amounts of data that washes through these platforms. How does using consumer data and behavior to build the next generation of customer-centric platforms, what will that impact be on the sale of banking products and the relationship between the aggregator and the intermediary? Are we looking for a little war here?
Well, I hope not, because we also bill for intermediaries, so yeah, that would be awkward. No, we're a B2B2C, so we're a platform, okay? And what we do is we keep it simple. We look at a variety of data sources that we think can help our B2C clients embrace data and deliver it to customers, and we work out then how we design the propositions around that. For the aggregator space, there's a dawning realization that whilst they're obviously doing a lot of volume and they're processing a lot of data, as you rightly say, the audience has always been quite transient. Okay, and there's a need for the aggregators, much as there is for institutions, and of course the firms in this room, to understand, well, what does that mean for the future? And how do we evolve our business models to retain customers, engage them more, and introduce more products? Fundamentally, they'll be using the same platform capabilities and data that we would use in the intermediary sector to deliver improvements and efficiencies in journeys, much to do with the value exchange that Derek was talking about, gain the right consents, which obviously Miguel was talking about, and deliver services which do two things, I would say. This is important for the intermediary sector as well, because we need to think about how this would happen in this space. The first is, with all of this behavioral data that we could analyze, we would have an ability to monitor the circumstances of a customer on their behalf. So between transactions, what's happening? And in delivering propositions that are of a digital nature, where consumers are engaging more frequently with and bonding with your brand or your firm, you can make other product recommendations that are peripheral to keep them engaged. Now, that's in the form typically of personal financial management capabilities and things that are always on. The second component beyond what we would call monitor is the ability to process the application automatically, and the technology is emerging to do that, of course, and we know that that is the case. This is just an evolutionary curve that both the aggregators and the intermediary sector will be following and delivering those tools and services, I think, from a defensive standpoint, primarily to their customers.
So, I mean, so that's really important for the mortgage advisor community, because generally speaking, people don't really want to chat about mortgages. It's not like they're buying a car or they get interesting stuff. Once they got the mortgage, they got the house. They don't really want to speak to you every day about interest rates and swap rates and whatever. So you're saying that there is going to be a way in between two fixed rate terms, etc., that the intermediary can communicate in an appropriate way with their customer and engage with them continually rather than at trigger points.
So I would say that the technology is there to do that. The question is, do the business models want to embrace that? Because if you then create that relationship, which is more interactive from a customer bonding or client bonding with your firm through digital means, you have the ability to defend against them looking elsewhere and going through the transient routes and making that bond and connection with the aggregator space or perhaps institutions directly.
Can I jump in and maybe bring that to life for you a little bit, in that we've built some demos in that kind of space, but what it's doing is it's taking things like the home rather than the mortgage. And what we're doing is we're looking at how we can save the customer money through their utilities by switching through the course of the year. It's monitoring their home value in terms of what's happening in the area to give them a touch point where for the mortgage provider, they can retain that relationship by providing touch points through the year where you can actually come in and say, look, there's things that we can do to help you understand better the asset that you've acquired using your mortgage in terms of your home. And I think what you'll see is that there's more focus on that kind of retention engagement type piece as time goes by.
So I've got this one last sort of question, which is for any of you, but you mainly. So you've got the later life lending, huge opportunity of old people. They are not necessarily the people that are actually going to engage in the data type situation that you're doing. Do we have a problem here where our big opportunity isn't that data savvy? Or am I talking bollocks? Always possible.
My view would be that in terms of from an engagement perspective, you get a wide range of the population who engage with technology and are in a position where they're prepared to share their data. I think that the challenge that you've got is almost the pace of change. So what lots of organisations and individuals forget is that you have an adoption curve. And the big issue in an adoption curve in terms of it could take 6 months or 6 years or 16 years to effectively deliver that level of change. And I think the challenge from an organisational perspective is that we have to deliver the right value transfer for the customer, for them to see the need to adopt and to share their data to effectively engage with these propositions. So I think that the onus is on the organisations making sure they design them appropriately and give customers the comfort that sharing data is of value to them.
Well, thank you very much to our really, really brainy and fantastically talented panel, including Miguel there. I hope they've given you something to think about rather than just more science fiction, which you don't believe, but all this data stuff is going to happen. So a big round of applause for our panel. Thank you very much.